Hello, and thank you for joining us at xm.com. You're watching today's Daily Market Comment by Jairala Bospisuros. I'm Cristina Marucos. The US dollar stood tall against most of the other major currencies on Thursday and during the Asian session on Friday, with traders maintaining their bets with regards to an even more aggressive Fed elevated. Following the hotter-than-expected CPIs on Tuesday, market participants brought on the table a full percentage point hike for next week's gathering, currently assigning a 25% probability for such a case, with the remaining 75 pointing to a third consecutive triple hike. With some participants still expecting a rate cut as soon as next year, a Fed committed to bring inflation to heel means that there's ample room for the US dollar to extend its prevailing uptrend. Therefore, even if next week's gathering results in a setback in the US dollar, it may just be a temporary correction before the next leg north. Wall Street resumed its slide yesterday with Nasdaq losing the most ground once again, which is indicative of investors acting based on their Fed hike expectations. The S&P 500 managed to break back below the key support zone of 3,910, which adds to the notion of further declines in equities. What may have been an extra reason for investors to reduce even more their risk exposure is the World Bank's assessment that the globe may be on the verge of recession as central banks are simultaneously stepping hard on the brakes of their economies. Overnight, Chinese data for August fared better than anticipated, but still property-related metrics worsened, highlighting the deep wounds of the sector and adding to concerns with regards to the future of the world's second-largest economy. That view is amplified by the fact that China's Shanghai Composite fell 2.3% during the Asian session today. Moreover, FedEx tumbled 16% post-market yesterday after the firm withdrew its projections, saying that its business would likely shrink even more. This points to a lower open today and perhaps another red day for Wall Street. Oil prices were also down yesterday, with WTI tumbling around 4% as major U.S. railroads and unions reached common ground and secured a temporary deal after 20 hours of negotiations aimed at averting a strike and a rail shutdown that could weigh on food and fuel supplies. Yesterday's slide may have added to the chances of WTI overcoming the $81 barrier soon, a move that would confirm a lower low and thereby the continuation of the prevailing medium-term downtrend. Thank you for watching the Daily Market Comment at xm.com. Have a great weekend.